And a quick sound check here as well. Lorna, do I need to hit record on anything? Okay. Grazie. Oh, Windows. Okay. So funny story. My computer in Wimberley crashed, like absolutely crashed, had to be wiped. And as I was resetting it up, I had a computer guy come out and he suggested, like, look, for whatever reason, so I kept you on Windows 10. I'm like, fine, whatever. So I was trying to get some stuff done today, and I was kind of, trying to add Snagit and Camtasia and a few other things, and it wouldn't go because it needed Windows 11. So I'm like, okay, let's just add Windows 11 real quick, thinking it'd be 20 minutes, and said, oh yeah, this will take 4.5 hours. So I scrambled out to Austin. I did not want to do all of this off of a laptop, and here we go. Yeah, Julio, Debbie, good to see you. John, yes, we're back. And so the goal today, and I like to do these kind of big picture updates, is one, because we see a lot of stuff in the news, the world works, and they just don't, and I think the best example I can give on that was, I remember this. So this was when in Apple, this was pre-split. This was a while ago. This was like, I think Steve Jobs is still alive. And then after a period of time, Apple went from 700 back to 400. And it was interesting when it was going up, and they were gushing about not only Apple, but their cowboy, quote unquote, cowboy culture and blah, 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 blah. And then when it was going down, all of a sudden, all the news stories on it were negative. Why? Because it was down. Oh, it's down. I guess their cowboy culture isn't working out. Well, nothing at the company had changed. It's just the economic conditions had changed. The economic cycle had changed. Ups and downs are normal, but essentially, and there's a saying I learned from Peter Borish, who's the head trader of Paul Tudor Jones and somebody I got to work with for a while. And he's like, first price, then news. And I disagreed with that. He's like, well, I'm like, what do you mean? Like, if you see like earnings, then the stock reacts. He's like, yeah. He's like, I mean, news are like headlines. First price, then news. Once the price takes place, journalists find reasons that it happened, and none of it it's all BS. I'm like, okay, and that actually made sense and stuck with me. And so the big picture outlook is nice because underneath everything that's happening out there is the real story of what's happening, and the financial news just doesn't really pick it up. Or if they do pick it up, they pick up bits and pieces and stuff like that too. So yeah, they just read their talking points. And so what we're going to talk about, and these are things I've covered before, but there's some new stuff here. And so there's two parts to this. One part is literally bigger picture outlook. What's going on? Like, what can we expect between through now and the end of 2026? Is there another 2008 coming up? That kind of stuff. And then after that, once we understand the landscape, we will look at kind of the idea of these cycles that I talk about, where I always like to pay attention to them. They actually always seem to have an impact. You just never had know how big of an impact, and the updated dates that are coming up from that. All right, so welcome. So one thing in the bigger picture we want to talk about, because this is actually a real thing, and it's actually good news for asset prices, but it's going to force it's going to force the government's hand in a way that's good for asset prices. So let's discuss population. So, obviously we hear a lot about immigration in the headlines, for the US, other countries. And the bottom line is immigration is absolutely good for the economy because more people equals more GDP. And the whole game, because the debt's never going to be repaid. I mean, it's important to understand that the debt that's there will never, ever be repaid. It's just going to be monetized away. Meaning essentially, think of it. If you make $100,000 a year and you got $100,000 in credit card debt, and your living expenses are $110,000 a year, right? You're never going to pay it down, and that's the U.S. government. So, but the game is that if the debt to GDP level remains at a kind of a constant percentage, then it's fine. Like if debt's 80% of GDP, great. if debt increases by 10 trillion, then GDP needs to increase enough so that debt to GDP is also still 80%, right? Okay, so just making up numbers there, but that's the game that's being played right now. Okay, so what about why immigration and why is this important? So immigration, I mean, essentially, immigration is 1,000% proven. More people that come into your country, the better your economic engine is going to be. It keeps debt to GDP at a manageable level. So essentially, the trend rate of GDP is essentially this formula: population growth plus productivity growth, which in the future we're going to get from AI and robotics, plus debt growth. Okay, all that equates into the trend rate of GDP. So why didn't we get a recession in 2023? Because everybody was predicting a recession. Why? Because there was the huge rise in immigration. It's like the biggest amount of immigration we've had in a long time, and that helped offset that. More people coming in and all that kind of stuff. And I'm just talking economics here. I'm not, obviously getting into the politics of all this kind of stuff. These are just economic facts. So now we have a reversal in immigration, which is called immigration. People leaving the country. And what will happen is this will start to show up in a rising debt to GDP ratio. Okay. Why is that important? This will force the government to inject more liquidity into the system. Right. So that's the part where it helps asset prices. So, kind of underlying thing that's going on with population. And yeah, Jonathan's just saying debt never gone away plus increasing money supply equals more Bitcoin. Yep. You're absolutely right. So here's the current picture of the Fed liquidity. And, of course, if you guys remember 2008, that's when we had the first, like, oh my God, huge jump in liquidity. And then, of course, on top of that, there was COVID. And then through 2022, all the inflation scares. So liquidity contracted and we saw the impact that had on asset prices. And of course, now everything's kind of turning higher. And what'll happen is that you'll see here is that when US debt as a percent of GDP um, goes essentially above, like when the debt goes essentially above, the debt rate goes above the GDP rate, then money supply is increased, right? And so you can see here that essentially the debt percentage is going to start going up here. They're going to have to increase it again. And they are. I mean, the global money supply is at record highs and all that kind of stuff. And then, of course, if you go back and you think about all this, what happened during this time, Bitcoin, real estate, all Bitcoin, real estate, stocks, all the things. Okay, so that's, kind of economics 101. The increase in liquidity will drive up the price of scarce. That should be scarce, not scare, scarce assets. So what are the assets here? And now I go back and forth on this. I'm a fan of bullion, silver, and gold. Like, just buy it, store it away. Fan of crypto, kind of fan of real estate. And as you go along in life and you try out different investments and stuff like that, you kind of start to see the benefits of doing some things and not benefits of others. So as an example, I mean, yeah, real estate. Okay. Well, if there's decent appreciation in the real estate, it makes sense. But if it's cash flow negative, it's kind of like if you say you owned, $100,000 worth of NVDA, okay, but you had to pay them $8,000 a year to own the stock, and then, but if the price of NVIDIA rose to 109K, then it's like, okay, that makes sense. That's kind of real estate in a nutshell, obviously, unless you have, something that's cash flow positive and all that kind of stuff. And so when you start to think about that, it's like, oh God, okay. I mean, there's taxes and all that kind of stuff. The point I'm getting at too is, and I'm a fan of gold bullion, silver bullion. What would be amazing is if you owned 1,000 ounces of gold, and then every year you got an interest payment of 60 ounces of gold, 6%. And then your gold just kept accumulating and accumulating and accumulating. Oh, okay, that's pretty awesome. But what happens with all this is that, I guess, the point I'm getting at is that there's two things that we want to look for in a situation like this: is that scarce assets will rise. And as I've talked about before, the assets that'll essentially rise the most are going to be tech stocks and crypto. And those will rise enough that it doesn't matter if there's any income that comes from them or not. Almost every other asset then you just want to kind of make sure, like, is there is there any negative carry associated with it or anything like that? Again, not a huge deal, just something I've learned over time where it's just like, it's certainly nice if you own something that's easy to get out of and creates income, right? And I'm kind of probably speaking the obvious here, but I've gotten into a lot of things like, oh, I got all this, the silver bullion and stuff like that. When you go to sell it, it's hard, all the fun things. But the main thing here is just that we're on the forefront of kind of what are the scarce assets, that are easy to own and then easy to sell if you don't want them anymore. And what's interesting about crypto, I'm again huge fan of tech stocks. And then what's interesting with crypto is it's the absolute wild west out there in terms of what's happening in crypto. It's like the 1970s in terms of arbitrage opportunities. There are people that'll, there's computers out there now that are looking at Solana trading, on the West Coast and arbitraging against Solana trading on the East Coast. And then it gets even more diverse or more disparate with other altcoins. Anyway, I'm saying all this just as there's a lot of weird, fun things that are happening out there. As a general rule of thumb, I'm a huge fan of like, look, you put your money in a tech index fund, don't worry about it, and get exposure to some crypto, and then you're good to go. But the main point is that I think that well, 2025 has been an up year. 2026 might even be a crazier up year, and we just want to always keep in mind that there's opportunities like that out there, and we'll look at it. So we have about $9 trillion in debt to roll this year. This is all the way. Oh, so the increase in liquidity will drive up the price of scarce assets. Some people ask why that happens. Well, that can't happen in a vacuum. So if you increase the amount of money that's in the system, then the denominator, the dollar, loses value. So it doesn't happen in a vacuum. And so, when you see essentially a house goes up in price from 500K to 600K, it really didn't go up in price. What happened is that the value of the dollar fell. So it's important to kind of think of it like that. So plus in losing population, okay, instead of people coming into the United States, they're being pushed out of the United States. We are starting to get close to what's called labor force participation rates, LFPR, that will force the Fed to use their balance sheet. Okay, so that's another reason that scarce assets go up. And we have $9 trillion in debt to roll this year. This is all a way of saying is it allows the Fed to cut rates and likely to start to do so aggressively. In fact, the forward curve is now showing 5 rate cuts between now and December of 2026. This will then support the economy and push the business cycle well into Q3 or Q4 of 2026. Okay, that's important because I've also talked about the 18 and a half year real estate cycle, which technically is set to hit in 2026. That's kind of what happened in 2008 was the last time that this happened. But because of what's happening and if you go back and you look at, say 2006, 2007, you saw that the business cycle was actually rolling over pretty hard. But we're in a situation now where the business cycle has had it's essentially been in a pause mode. It is now starting to roll up. So that's what I mean by getting pushed out, and it's a delay in the rolling over of the business cycle. Okay, that's all a long way of saying is that 2026 should be pretty robust, and then if we do see something like a 2008, it probably won't start being evident until like 2027, 28. To me, it makes a lot of sense that there might be a 100-year anniversary 2029. Again, all stuff we can get, we'll cross that bridge when we get to it. In the meantime, more printing equals MOAR, asset prices going higher. So the main kicker that we are, as soon as the last kid goes off to college, best time to sell my house. Yeah, I'm kind of liking the idea, and I've been talking about this more with Maria, is like, look, we could use the opportunity to just like get liquid and not have any responsibility for a while, in terms of like managing real estate and things like that. And that's kind of intriguing, but we'll see. Put it all in Solana. So all this means that assets go higher. So the main kicker at this point is waiting for the ISM essentially to go over 50. It's actually been under 50 for the longest time since it's been recorded, because the business cycle, it goes back and forth and stuff like that. And and the idea that it hasn't been, it's starting. There's signs that things are picking up, But what it means is when the ISM goes over 50, it means that corporate profits will be higher. It boosts capex spending, and it also finds its way into rising wages, which improves discretionary spending. So ISM going over 50 is a big signal that spreads its way throughout the economy. Now, this will push the ISM into a late cycle peak. Again, it's been under 50 for a record amount of time before the whole process reverses and the cycle starts over again. All right, so what does that look like? So here's ISM from like late 1980s to now. And you can see this is the black line is the 8-month lead on the actual ISM number, and then corporate profits that follow. You can see in 2000, and then of course remember what happened in 2008. We had bus boys buying houses, so the real estate market kept going up. This moves first, okay, and then of course we know once everything it all kind of rolled over and died. So where are we now? So now we're sitting here. The ISM has been under 50 for a record amount of time since this has been measured. You can see there it was under 50 for a short amount of time, short amount of time, short amount of time, shorter amount of time, shorter amount of time, et cetera, et cetera. And it's starting to turn higher. So that's the interesting thing here. And that's what I mean by a delay of essentially a pushing back of the economic cycle. So that's the part that's kind of interesting here. Normally in this type of a situation, I mean, normally what's normal, right? But the main point here is when I talk about like the 18.5-year real estate cycle, if we look at where we were last time, a few years before the real estate crash, ISM was at over 60 and started to fall, whereas now we're sitting here just below 50, and we're seeing the leading indicator here that it's going to start turning higher, and likely we'll get up to 60. So that's a big deal. A little delayed, but it's a big deal in terms of the bigger scope of what's going on. Earnings. On average, we've had now over, I think it's 95% of the S&P 500 companies have beat earnings by 8.4% across all sectors, with with consumer discretionary beating by nearly 14%. All right, earnings have been good. People are spending money. So you hear like in the news, you hear a lot of bad news out there. You hear things that the job market might be hard. All these things, but it's really if there's anything that I've seen is that AI is certainly taken a beating on entry level coders, because it's like Claude can do that. So there's certainly some sectors there that are feeling the pinch, and that's always, it's very cyclical as well. But on a whole, things are happening out there. In other words, the economy is in pretty good shape. Yeah, exactly. And the Fed is about to start cutting rates again, which improves conditions even further. It's kind of crazy, right? And it's interesting because each economic cycle is a little different, and this one is different still. Also, another piece of the puzzle: credit growth is accelerating everywhere, especially in China. So China was restricting things for a while. Now they're actually rolling out the red carpet in credit. That means that there'll be some tailwinds coming out of the east. Credit is fuel for the economy. Negative credit growth just essentially means you're taking your foot off the gas of the economy, while positive credit growth means you're adding fuel to the tank of the economy. Okay, and so right now we're experiencing positive credit growth. There are now 5 rate cuts priced in through December of 2026, which means yet even higher prices on assets. It's funny when I'm saying all this, I'm like, why do I even try to do any contrarian trades? But that's the life of a trader. In summary, 2026 is shaping up to be another good year for asset prices to increase, and with lowered rates, the question right now is like, gosh, is real estate's been coming down, it's been soft, there's a lot of supply, it's normal right now. And the question is about to plunge. From what I'm looking at all this is that you would actually see real estate firm, probably not exceed the COVID highs, but certainly kind of bottom out and see a little bit of a bump, 2026 and all that. This sets the stage for a possible 2008 repeat instead of 2026 in 2028 or 2029, which is the 100-year anniversary, of course, of the 1929 stock crash. But we will cross that bridge a little later, because that's a little too far out to, we can look and see the painting on the wall and what's happening now and understand what's happened in the past. But, history repeats. History doesn't exactly repeat, but it rhymes. And this is what all, the picture at least that's being painted. So the mega trend of growing global debt will continue. No government is incentivized to cut spending. That's period end. Governments aren't in the game of running sound economic policy. They are in the game of winning votes. Again, I think I've told you guys I've been reading more about the rise and fall of the Roman Empire. And it's interesting about that is that, people that are whining about politics today, the politics that are the political games that are happening today are child's play compared to how they played politics in Rome. Straight out bribing people for the vote. Murdering people on the Senate floor, all that kind of fun stuff. So, we're little children running around, playing politics when the real was it Machiavelli that was really happening, you know, well before anything that's happening today. And governments haven't changed. They are in the game of winning votes and staying in power. Tax cuts and healthcare, and so some people say, well, that's not right. Okay, but we're all here living in the real world. We can call it the matrix if we want, but it's what's really happening, and it's important to understand what's really happening so we don't get caught up in some fantasy of what should be happening. Tax cuts and healthcare benefits provide financial incentives for votes. Bottom line of all this is currency debasement. And um, and you've got this, of course, with an aging population, and of course we've got, instead of people coming into the country, we've got people leaving the country. Has no end in sight. So currency debasement runs at 8% annualized at the moment, on top of inflation at 3% annualized. What does this mean? This means that if you got $100,000 sitting in the bank, um, let's say it's just earning no interest, right? But obviously, if you've got it in a money market fund, okay, it's earning 4% interest in a money market fund. So what at the end of the year, okay, you have $104,000, but you got to offset that with the loss in purchasing power. So 11 minus, I know this isn't exact math, but let's call it 11 minus 4 is 7. So 104 minus 7. And then essentially what happens in real money terms is that your 100K is now worth 97K of purchasing power. So you got 4% in interest rates, but you lost 11%. Again, I know that math isn't exactly perfect, but you get the general idea. So the only way to offset this is by holding assets that offset, or ideally more than offset, this reality of 11% annual debasement in the purchasing power of your fiat currency. This is why corporations, are horrified by the idea of having a large amount of cash sitting on a large pile of cash for too long. They'd rather put it to work in an acquisition or some type of asset. We're seeing more and more Bitcoin, showing up on the balance sheet and stuff like that too. Nobody killed on the floor of the Ukraine parliament, but it gets pretty rowdy. Yep, yeah, there's definitely some rowdiness out there, for sure. So I thought what was interesting about this, and I'd mentioned this last time, is that Elon obviously got frustrated with the Republican Party, and he's like, you know what, I'm going to set up a new political party, and I mentioned this before, it'll fail, but he's since come to his senses. I'm a big believer that Elon can pull off a lot of things that nobody else can, but he's not going to pull that off, and I think he finally recognized that that won't happen. First of all, you cannot shrink systemic liquidity without an economic collapse. That doesn't help him very much. And no one is going to vote for that. So he's already throwing the towel in on that idea. He had a bunch of Zoom calls and conference calls set up. He canceled them all. He is not going to do that. So there's no way to lower debt. It's just never going to happen. The only answer is to lower the ratio of debt to GDP. Now, this happened in the 50s and 60s with a baby boom and rising productivity. But right now, there's no baby boom on the horizon. Millennials aren't having kids, Gen Z aren't having kids, Gen A probably doesn't want any kids. So where does the GDP expansion come from? AI and robots. All right, this is going to be huge. I think AI is a little overhyped right now. I'm a fan of AI. I use it, but I think that it's certainly very hypey. But the robotic part is very, very real in terms of, Amazon's using them in their factories. China's using them everywhere. At some point, you're going to see them in your home. that's a very, very real thing. So the game continues, and there is no final outcome. And by the way, I guess I didn't mean to imply that AI wasn't good. I just mean that AI is pretty phenomenal, but I think it's overhyped at the moment. And the best thing I've heard about AI is that there's a lot of hype around how do you make AI into like a person, and it's not the right way to think about it. How do you make AI useful to people? And I've certainly found some ways to make AI useful in terms of organizing my day. Obviously, it's great for low level programming and things like that. But here's the interesting thing about AI. Yeah, Tesla and robots right there. Um, Here's the interesting thing about AI. Okay, so think about this. I think this is pretty fascinating. So let's talk about Chat GBT. So so what happens in Chat GPT? Okay, everybody's using it. Like hedge funds are using it, lawyers, law firms are using it, medical practitioners are using it. What they should be doing is setting up their own LLMs to keep the data private, and it setting up their own LLMs to keep the data private and to have something that's specialized with their knowledge is going to get commoditized. So it's kind of fascinating if you think about it. Like if you want to search for what hedge funds are doing, go into ChatGPT because a lot of hedge funds are using ChatGPT. And once it's used in ChatGPT, it becomes common knowledge if you got the right prompts. So it's kind of a fascinating way to kind of, I don't know if democratize is the right word. Um, anyway, it's an interesting thing. Okay, so humans and their politics and their economy are always going to be messy, just as they have always been messy. All right, a few more slides on this, and then we'll talk about kind of the shorter term cycles. So the key right now is going to be which societies will embrace technologies and which will shun it. I would say China and Asia in general is the furthest along. Um, when we were in Singapore, the amount of things that were computerized and automated, it was astounding. It made things faster. It made things quicker. So the China is furthest, while Europe is. But look, it's the way of the future, right? Political harmony is impossible at the fourth turning. Too much change, too fast, as one system dies and another is born. But everyone is in the same debt boat. That's the commonality, and will have to continue to debase their currency to pay for their aging populations and support this transition. So that's the whole crux of this. Um, They all know the game to debase their currency gradually. They all know that the economic engine is only about debt servicing. Okay, so if you think about, that you're working and you're paying taxes so they can service the debt. So it's important to kind of understand the underlying big picture of reality. And this is going to be the underlying basis of all politics. You can certainly see it in what's happening today. Okay, so let's talk about some short term cycles. Okay, Bitcoin 16-month cycle update. So the highs targeted in July 2025. We came up, we retested them in August. Since then, we've been starting to come off. So the next key cycle date for Bitcoin is late November, early December. Okay, so what does that mean? Typically, in something like that, what it means is we're going to sell off for a little bit. We'll find a bottom, rally into end of November, early December, and then you'll see another top at that point. Bitcoin is also a solid risk off asset, meaning when it is rising, the appetite for risk is high. And when it is falling, the appetite for risk signals caution. I think what's fascinating right now is you've got Bitcoin coming down, but stocks going up. They're usually a little bit more in line. So I think it's a little bit of a divergence, but I'm certainly not going to fight the trend that's happening in stocks. I think what's interesting too is that Bitcoin appreciates. Bitcoin and gold are a little opposite in that gold likes global instability, whereas Bitcoin likes a little bit more certainty. So Bitcoin rallied into the Alaska summit between Trump and Putin on high hopes for a resolution. And then, of course, once nothing happened there, it's been selling off ever since. I am actually looking for Bitcoin to test 100,000. Does that mean I'm bearish Bitcoin? No, long term, I like it, but nothing goes straight up. So if we look at, this is a chart of Bitcoin I took right today. So we had the good here we had the spike into July 2025, cycle high. We came down, we retested the highs. I think we eked out maybe a new high into the Alaska summit. Since then, we've been selling off. When you get these big pukes like this, typically then, you get a 2 or 3 day bounce. In this case, back to the 55 EMA before we get the next flush. Right now, I'm targeting 100,000. I'm the first one to say that it may not work out the way I think, but everything I'm seeing supports that. Everything with the cycle dates supports that. And then if we can it's possible we could flush all the way down to 80,000. I think that's a stretch. But what I'd look for in something like this is if we flush, look for some bottoming signals, and then we get a rally later in the year into end of November. Okay, so that's what we got there. Okay, the next key cycle dates for stocks is September 19th and 22nd. So it was interesting. We did have one that I posted in the room that we had a key cycle date coming up on July 30th through August 1st. And what was interesting, if you guys remember that, is that the stock market got absolutely hammered for 2 days and then shook it off like a Labrador jumping out of a pool and continued going higher. So the interesting thing, what I found about these cycle dates is what's interesting about them is that the timing for, and again, I don't pretend to understand them. I think it's one of those things that people follow them and they work. So this is the last cycle date, and you can see we went from a high of 64.27 to a low of there we go. Well, let me just bring this up here because we don't need all the other stuff. So we went from a high of 64.27 to a low of 62.12. So 200 points in 2 days down to the 55 EMA. Normally, that's a more gradual kind of a slide. And then from there, we just marched right up to new highs. Okay. So it's interesting like this is I found that these cycle dates are actually pretty good, but you never know if that's going to be like a 1 or 2 day slide or something bigger. Okay. And in this case, we got a nice 2 day slide. And then here we go. So we're right back up again. So the next cycle dates are coming up in about, let's see, what did I say? September 19th to 22nd. So what does that mean? So there's a couple of things. And so here's what I have found. So there's two things. It could be two ways. Either one, let's just say we keep rallying from here to September 22nd, then I'd look for a high there. More than likely, what I've seen in this situation is that we're going to see a high, we're going to see a sell off into September 22nd, and then you buy that with both hands, and then we go higher. Now, does that make sense? So I don't know when that happens. I just know that we're here, and are we going to go straight up for 4 weeks, for 3 weeks from here? Probably not. We might. I acknowledge that. But what then I look for is like potential sell signals with the idea that we could sell off maybe the last week of maybe the week before we sell off into those dates. So not quite as clear, but that's just something I've seen how those work. But and again, remember when I say this, it's just a pullback, right? So you can hold through the pullback or you can try to play the pullback. Blah, blah, blah. Okay, bonds, upcoming cycle low coming up September 8th and 9th. Now, right now, if you look at 10-year notes, come on, think or swim, you got this. I know that the market's closed and you're trying to utilize all this data. Let me use my watch list. That usually goes faster. Oh, that's because I'm using the pit. Okay. So if we look at 10-year note here, 10-year note, it's actually firming up. Okay. This is good for interest rates. Guess what? We got to squeeze. 30-year, not as much. It's actually been a little lackadaisical here, but of course it's the 10-year that the mortgage rates are based on. So that's good. But in terms of a cycle date, we've got, what was it? Cycle low September 8th to the 9th. So that's kind of interesting. So I look at this as a couple different ways that either if we just keep rallying into the 8th to the 9th, that'll probably be a topping point. And it does kind of tend to top the first week of the month. If for some reason we start to sell off here into the 8th and 9th, then I would buy it. It's not, bonds haven't been super clear. I mean, they've just been kind of all over the place. That's for bonds. Gold, there is an upcoming cycle high, the 25th through the 29th. Now, gold looks fantastic here. So when I see that, it gives me a little bit of a pause that instead of breaking out here and exploding, that we may just kind of do something like this. So we're just kind of stuck in this range. Again, that's how I interpret that. So I would be looking that I like it, but it's very minor ones. There's some bigger ones coming up in the future. Like crude is actually a pretty big one. So for crude oil, there is a bigger cycle high coming up September 5th through the 8th. And you can see we had a spike here. That was the last cycle high. And yeah, so for that, what you can look for is that if you get a rally into September 5th through the 8th, either A, take profits, and then from there you could look to short crude oil and do the same on those stocks too. So those are the main ones that are coming up. So sometimes there's ones that are coming up that are very major. For example, Q4. I mean, when there's very major ones that come up once in a while, and I always like to keep an eye out for those. Right now, these are all kind of intermediate ones, minor to intermediate ones, just kind of a good kind of an FYI to know and all that kind of fun stuff. All right, I think that's all the main stuff there, and we can look at a few things. So there's a couple things I just want to show you in terms of our room, and then I'm happy to take questions and things like that as well. So for those of you that are out, because some folks are looking at this out on YouTube and a few things like that, is if you would like to get access to more of this information and real trades and stuff like that, we do have a $7 trial for 30 days for our Mastering the Trade Room. We got live trading alerts, um, ongoing updated cycles that I keep track of. We got daily videos. We got a weekly watch list. We've got a group of 8 other traders that are in there doing all kinds of awesome things. We're doing zero DTE. We're doing swing trades and all the kind of fun stuff. And we've also got a mobile app that sends all the alerts out, which is pretty awesome. So here are the traders will kind of take place in there. Taylor just released this really awesome tool for being able to kind of find kind of like the highest probability setups that you can find really quickly, which was pretty cool. Anyway, I kind of went through all this. I won't spend a lot of time on it. That's kind of an example schedule. And if you just go to simplertrading.com/, to that trial. And then the other thing that's coming up that I think is pretty cool is that Taylor, who I just told you, just released a pretty awesome kind of a scanning tool to help you find some of the stuff a lot quicker, all that kind of fun stuff. He has a class coming up called the Big Three Squeeze System for 2025. So what he does is he goes through and he has this Big Three Squeeze indicator with the signals indicator, with the watch list and the entry labels and the squeeze bars, and it gives you essentially at a glance, you can see, look in the market and see what are the best setups out there for you today. And so that's pretty awesome. And he'll be doing that class this Saturday, August 30th, from 10 o'clock to 2 o'clock. And I tell you that the scanner that he put together is pretty amazing. You just kind of come over here and say, you know what? I just want to see at a glance which ones are going to be my best ones. RTX has been a lot of fun. Um, JP Morgan, a couple of these that have the A plus kind of markings here have stood out really, really well. And then of course, if you want to short everything, it also gives you the things to short as well. And you just get this at a glance. Anyway, all kinds of cool stuff there. And then I am happy to hang out. We can look at a couple of charts. I know we had some earnings after the close, so I'm always curious to see what those companies did. Let's see, how did of course, we saw NVIDIA had earnings yesterday and they closed down $1, so kind of sucked all the life out of the premiums. We also did an earnings trade in CrowdStrike. We sold Iron Fly, that worked out great. We sold a call credit spread at NVIDIA, that worked great. ULTA looks, do their sales exceed the shoplifting? So closed at $530, got up to 578, and is now at about 550, up about $23. So we'll see where it is. We did an iron fly on that one. An iron fly, basically, you're just making a bet that the stock's going to stay within the expected move, and so you essentially make money if the stock essentially where it explodes higher. And what's interesting like this is there's two ways to trade this stuff. So if we look at something like NVIDIA, okay, so NVIDIA, we did a call credit spread, meaning like, okay, we thought that the earnings on NVIDIA, while they would be good, would essentially be priced in and it wouldn't really explode higher. Like we weren't going to see like this crazy $100 move happening in the stock. And so what we did on this is that we sold a call credit spread. We sold the 185 call, the 190 call at like $2.20, and then we bought it back this morning at like 75 cents. All right, so that was kind of fun. And then for CRWD on this one, we just did one lot because it was pretty thin, and we sold the 425 call and the 425 put, and then because that's where it closed yesterday, and then we bought the 455 call and the 395 put as protection, sold it for like 22 bucks, bought it back today for $12.50, good for almost $1,000. And all you had to do is just let it ads on this one at $3.94, one at 750. So we had to do kind of average in a little bit, and then looking to see if that one can go. And probably right now, my most controversial trade that people don't like is that I've got puts on IBIT because I am looking for Bitcoin to test 100,000, and Bitcoin's at about 112,000 right now. So right now I'm losing money on that trade, but I am planning to add to it, especially if Bitcoin can get below 110,000. Now, am I bearish on Bitcoin? No, I love Bitcoin, but I think it's going to test 100,000 for all the reasons that I talked about today. And the other, okay, so the last one, so earnings, right? So then you got stuff like this, PSTG, where we did not do this as an earnings trade, right? But what we did do is after the fact, we bought it because when a stock has earnings and they're 2 times the expected move, the odds are incredibly strong that for the next 5 trading days, it's going to move sideways to higher. So when we saw that towards the end of the day that it was holding, we went ahead and bought some calls on that. And they don't have weekly options, they just have the monthlies. So we got the $75 calls that were in the money. And I kind of like to go a little bit in the money so we're not getting completely premium sucked. I didn't do it as a spread simply because it's 22 days out. And if you do like a $5 wide debit spread here, you're not going to see any movement. So, I'm not against spreads. Obviously, I like spreads, but in this case, it's 22 days out. I just want the pure directional play. We closed at 720, and then the idea is, could we get some follow through tomorrow and possibly? I think the markets are closed on Monday, Labor Day, but could we get some follow through? Into next week. So that's the idea there. That's another way to do earnings trade. So that's what we got there. And then let me take a look at to see if there's any other questions. All right. So we have. Oh, yeah. What did Affirm do? AFRM. So, yeah. So it's up about $8. Yeah. So we'll see how that one does into tomorrow. AFRM. And of course, on that one, we were slightly bullish on it. So we did the put credit spread. We sold the $80 put. We bought the 75. We did it for 225. And of course, if we open up tomorrow at $87, then this should go pretty close to worthless since tomorrow's Friday. And then we just put that money in our pocket. Now, you might ask on something like this is that if you're bullish on it, why not buy a call? Let's say that I was like, oh, I think it's going to go up. So buy the $90 calls. Like, I think this thing's going to go up. So let's buy the $90 calls. Well, you bought them at $1.76, right? Market opens up at 87 bucks on Friday, the day of expiration. And the implied volatility goes from 304% to normal. If you're going to buy one $90 call, I would rather you sell 3 at the time at the money, put credit spreads, because your risk reward is going to be about the same and your probability of success is much higher. Now, yeah, if a firm, gaps up and goes to 140, you'd obviously be better off buying the call, but how many times do you see that happen? So anyway, so assuming this holds up overnight, that should be a good play in the morning. Yeah, and then we did Netflix, and Netflix was not an earnings trade, but what we're looking for here is that we were just kind of looking as like, all right, well, Netflix came down to $1,230, so we sold the at the money put credit spread. This expires tomorrow, and then we bought the out of the money call debit spread with the idea. Because we got a lot of open interest at 1250, and it doesn't mean we'll go to 1250, but could we tomorrow, especially early in the session, get a little bit of a boost to the upside? Also, keep in mind tomorrow is the last trading day of the month, and the last trading day of the month typically sees MOC programs from $5 billion to $8 billion in the last 10 minutes. And if you've noticed, the last day of the month, sometimes you get S&Ps moving up 30 points or down 30 points. And so there's a lot of interesting opportunities there. And so I also thought if this is going to be some buying tomorrow, that would also help Netflix. And then there was something else. The crowd, maybe that was it. Oh, Tesla. So Tesla tends to rally on Fridays. Slightly in the money put credit spread, for $2.75, just because the calls are pretty pricey. So like I could have bought the 350 calls, for $1.60. Obviously, if we gap up at 355, that works out pretty good. But if we gap down, these calls lose value pretty quickly. And even if we recover and fill the gap, they'll still go to zero. Whereas obviously if we gap up, the put credit's fine. But if we gap down, this still has a chance to make money. Whereas the out of the money calls kind of toast at that point. Yeah, so for tomorrow, I will definitely be trading the close. I'm not going to be on the mic, but I will be looking for trades the last half hour, and I'll post them because the last trade day of the month. I mean, you only get to do it 12 days a year, so it's something you want to pay attention to. So yep, very good there. Let me see. Yeah, so we'll see where Ulta is. Yeah, I would say BLSH has been my most questionable trade. I agree with that. IPOs are tricky. I like IPOs, but they're just different because you don't have a lot of data to work with. So that's a fair statement. So, for this particular one, you can see it got to 118 bucks. We fizzled out, and then once we kind of tested the 618, I picked up some more. And essentially, the nice thing about IPOs is when they move, they can go 10 points in one day pretty easy. And then, we got so a little different. I'm a fan of IPOs. Obviously, they're much more fun when when they're working right away. Um, Yeah, I see someone asking about NVIDIA. I'm not quite sure what the question was, but the idea with it is, I'm not, and just to be clear, I'm not bearish on NVIDIA, but the reason I did a bearish trade on it was simply earnings related. So yesterday, NVIDIA had earnings, right? And it closed around $182, and it had an expected move of plus or minus $10, meaning that the market wasn't expecting too much from it. And my thought with it is that, especially based on the last couple of earnings, is that they're going to come in with good numbers. But look, when a stock rallies all the way in earnings, it's already priced in, you know. So usually then after earnings, it kind of takes a pause. So that's why we sold the 185 call and then bought the 190 with the idea of capturing, with the assumption that NVIDIA would not explode higher. It would just be a quiet open. And then B, the drop in implied volatility then would give us our profit. So anyway, I'm not sure if that was the question, but Yeah, and I think that's about it. And anything else? Nope, I think that's it. So let me just double check if there's any other questions. No, I think that's it. Let's see. Well, you know what? Actually, okay, let's look at CRCL and then because I'm getting a lot of questions on CRCL, and then we'll also look at CRWV. So we had a lot of fun trading CRCL, and still get questions about it. And my answer to that is it's dead, 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 dead. And so this is a lot of fun. Like, this is like IPO. It comes up, it pulls back. You get in, it's like, oh my god, and then you see if there's another chance, like, oh my god. But when you see like something like this, especially in an IPO, where you just see no bid, it's no bid, no bid, no bid, no bid, no bid, no bid. Oh, it gaps up and then fall. No bid. It's just dead. So I like to think of this as it's a question of WTMG. Where's the magnifying glass? And what that means is, like, here the magnifying glass was on CRCL, meaning a lot of people on planet Earth were watching the stock and trading it. The magnifying glass has since moved on. And so what you don't want to do is bet that the magnifying glass is going to come back. That's what I mean by it's just dead. Where are people focused? If you're looking for, because this is like a momentum trade. So if you're looking for a momentum trade, you got to look, where are people focused? Now, the same could be said for CoreWeave, CRWV, although it's not as drastic as I would say the other one. So this was actually a pretty legit and fun move. It obviously is pulled back. And now the question, what does it do from here? Again, I've seen stuff like this when something like this comes so far so fast. I mean, remember, the stock is up like what 300% um, or more in the course of a month. It's not going to sustain that. And what has to happen is it has to come back and catch its breath. Think of this as somebody just ran 100-mile race. Okay. And now for the next couple of weeks, they need to recover. They need to eat some protein. They need to recarb up. They need to get some electrolytes. And then they could probably get ready to do that again, like in 6 months. And it's the same thing with the stock. So remember, when you see a situation like this, you're not trading CoreWeave. Okay. What you're trading is a magnifying glass moment in time where everyone's attention is on the stock. That's what you're trading. You're not trading the company, you're trading the psychological conditions that create the opportunity of a bigger than expected move. Okay. And then once it's over, that magnifying glass shifts to other stocks. Okay. So if you're playing momentum stocks, great, play the momentum, but know when it's done. So I like the stock. I'm not playing it right now. If anything, it's probably a good one to sell call credit spreads on, is for people that are still buying calls on it, hoping, for the glory days, so to speak. Another great example of this, stock to trade, great. It was, let me put this on the weekly to give it more perspective here. So obviously super, super fun stock to trade, mother of all bearish flags. And then since then, it's just been dead money. It's tempting to go back and look at it because it was so fun to trade. But the magnifying glass has moved on. Oh, interesting point and figure. Yeah. So John, good summary and stocks. Get ready for a possible pullback into late September and end of the year rally. And again, Bitcoin I think is the absolute opposite right now. So just look for this. I think the idea that we can test the 200 is pretty high right now. The next couple of days will kind of set the tone, but look, this is not bullish by any stretch of the imagination. Cycle wise, it's also on track. So there's some support at 110, but it's certainly, I wouldn't say it's getting a hard bounce off of 110, right? Oh yeah. So the last thing, I thought I had a slide on this, but now I don't remember saying it. So the last piece of this, maybe I did say this, but if not, I want to emphasize it. So when the ISM goes over 50, there's another piece of the puzzle here. Typically at that point, Bitcoin kind of takes a side seat. It doesn't mean it falls, it just kind of takes a side seat while the altcoins explode. So look for the ISM to cross 50. And then, if you're familiar with altcoins, load up on your favorite ones. But that to me is going to be a really interesting play. And it should be a lot of fun. All right. All right, everybody. Well, great hanging out. Always good to see everybody, see the questions. I'm not planning on being on the mic tomorrow, but I will be in the room simply because the last day of the month, I've got a lot of trades that expire tomorrow. A, so I want to post those exits. B, last day of the month is typically some fairly interesting opportunities in especially the last 30 minutes of the day. You can buy some cheap SPX or NDX and walk away and let it cash settle. And looking to do that, and then then it'll be September. Can't believe that the year is going by this fast. All right, good stuff, guys. You guys have a great rest of your day and evening, and we will, for those of you in the room tomorrow, we will see you tomorrow.